New Shib burn portal detected while 105 million Shib gets removed. Burning cryptocurrencies and NFTs is comparable to setting cash or art on fire, although the process is a bit more complex than lighting a match. In recent news, the Dogecoin killer, aka Shiba Inu, burned 105 million Shib tokens. But why should a crypto project want to destroy its own tokens? There are a number of reasons for this. So what does the burn mean for the future of Shiba Inu Coin? Let's talk about it. Shiba Inu, or Shib, has emerged as one of the most popular cryptocurrencies in the world. Shib's low price and wide availability has drawn many investors to the dog-themed meme coin to try their luck in making a quick buck from the token's rise and fall. However, Shiba Inu's status as a long-term investment has always been questioned. The token is considered a meme coin with near-zero utility and is seen by many as a cryptocurrency for speculation. However, Shiba Inu's community of developers have been working behind the scenes to change their perception of the 14th largest cryptocurrency by market capitalization. So let's take a deep dive to assess whether the recent Shiba Inu burn will be beneficial for it anyway. But before we get to that, let's discuss what does a token burn actually entail. The act of burning a digital asset involves sending it to a place from which it can never be retrieved, also known as a burn address, which effectively removes the digital asset from circulation by locking it up for eternity. A burn address is a digital wallet that can't be accessed because it doesn't have a private key attached to it, like a lock that someone never built a keyhole for. Burn addresses are also sometimes referred to as eater addresses. So sending a token to a burn address effectively removes the digital asset from its overall supply, locking it up in the hands of nobody and preventing the asset from ever being traded again. Now, talking about Shiba Inu's recent burn, there is a new website that burned Shiba Inu, according to the tweet from @Shib Superstore, the Twitter account for Travis Johnson, the creator of the Shib Burn mobile games. In interim, a sizable number of Shib tokens have been taken out of circulation in the last 24 hours. However, this still feels like a drop in the bucket. The Playzone online website, which is included on the Shib Superstore portal, was referenced by @Shib Superstore in a tweet. According to Travis Johnson, this website also assists users in burning Shiba Inus. However, depending on how many visitors have visited the website, the process is set up to generate revenues or burn Shib. Contrarily, playing mobile games on Travis's website enables Shib burning and provides a small fee to game developers. Therefore, Travis appears to think that Playzone.online could draw non-Shib owners and possibly pique their interest in the second largest meme coin and in burning it. So the big news for Shib investors is that the Shib army has reportedly sent a total of 105,165,658 Shiba tokens to non-spendable wallets, where they will be permanently locked, according to a tweet from the Shib Burn Twitter account. According to the tweet, it just took 8 transactions to burn as much cryptocurrency this time. At the moment, the total amount of burnt Shib tokens equals 410,377,554,088,301. But 558,233,995,677,178 Shib are still in circulation. Now, what happens when crypto tokens are burned? Burning tokens can lead to an increase in the price of those tokens that are still in circulation. An asset's price can be thought of as a relationship between supply and demand. If there's less of an asset available to investors, then there is a demand for it. The asset will command a higher price as it is traded. Inversely, if there's an abundance of an asset that doesn't meet the demand for it, the asset's price will often fall. Therefore, by reducing the supply of tokens, burning tokens can create an imbalance in relation to demand that usually moves the price of the token upwards because of the asset's increased scarcity. But why do some protocols burn tokens? On occasion, crypto projects will burn their tokens in much the same way that companies buy back their shares, absorbing the cost of stocks and returning value to investors in the form of a higher price for the security. For this reason, a project burning token can be interpreted as positive news, but it doesn't always have an immediate effect on the price. That's because some token burns are automated to happen regularly or are disclosed well in advance and are effectively priced into the value a token values at well before the burn takes place. It's also possible that other news regarding a digital asset can have a more outsized effect on any price movement. In April 2022, Shiba Inu developers launched the Shib burning portal, with those who chose to burn their Shib tokens receiving another token, burnt Shib, in exchange, which pays out rewards in the ERC20 token Ryoshi. Some algorithmic stablecoins use burning as a method of keeping the asset pegged at a certain price. The mechanic works by burning tokens when the asset's price is low to reduce supply and better match demand. Often, algorithmic stablecoins mint more of the currency to increase the overall supply when the opposite situation occurs. However, the viability of the algorithmic stablecoin burn mint mechanism has come into question since the collapse of Terra's stablecoin UST in May, which saw the value of both UST and the Luna token used in the burn mint mechanism plummeted to almost zero. To date, no stablecoin has been able to consistently maintain its price peg using only algorithmic and burn methods. But Shiba Inu price market sentiments remain optimistic despite the penny from Eiffel-style decline. According to the technical analysis by experts, Shiba Inu price shows extremely bearish technicals, confounding that a sweep of the lows event could be underway. The technicals suggest that an immediate liquidation could occur after a 5-wave impulse into the bullish targets occurred. Recently, on August 15th, both bullish targets were breached as the Shiba Inu price saw a 35% hike in just one day. As a result of the buyer's surge, the Relative Strength Index, or RSI, measured the Shiba Inu price as more overbought than when the notorious Dogecoin price traded nearly 150% higher at $0.00003261 back in February 2022. Accompanied with the RSI bearish divergence was an influx of bearish volume near the top of the price hike and a classical bearish ramping pattern. Moreover, Shiba Inu price currently trades at $0.00001304. Despite the extreme bearish signals, an influx of headline news persists in the media about Shiba Inu tokens being burned from the total supply. According to the Economic Times, 400 trillion tokens were recently burned in the summer of 2022. In addition, Twitter accounts have contributed to the discussion with theoretical models of what the impact burning SHIB tokens could have on the Shiba Inu price and overall ecosystem. According to a popular Twitter account and SHIB advocate at SHIB BPP, 111 trillion tokens could be burned within months. Therefore, despite the optimistic market sentiment, the Shiba Inu price has not correlated well with the burned token theory. From a technical standpoint, the SHIB price has struggled to make persistent gains, and the recent 35% upswing may have been too steep for the bulls to sustain. So what was once a profit-taking consolidation near the $0.00001500 levels has morphed into a penny from Eiffel-style decline as the SHIB price is currently down 27% since the new monthly high at $0.00001800 high was established. Now, the recent pump and dump confound the previous technical outlooks forecasting a further 25% decline, and bearish targets of interest are near $0.00000970 liquidity levels in the short term. So invalidation of the bearish thesis is a breach and close above the $0.00001700. And if the bulls can breach this level, they may be able to pump a bullish scenario targeting $0.00001978. Resulting in a 52% increase from the current Shiba Inu price. Now, considering the recent news about the Dogecoin killer, what is the future of Shiba Inu Coin? Despite its strong community, critics of the project have commented that the token's future performance will likely be limited by its lack of utility and comparative advantages. Sean Williams wrote on an investment guide website that The Motley Fool on March 26th. Another problem Shiba Inu will run into is the lack of differentiation and comparative advantages. Although it's popular on social media, the reality is it's nothing more than an ERC20 token built on the Ethereum blockchain. Williams was not convinced that SHIBcoin could reach $1 by 2025 unless the project can achieve 3 key developments: the successful launch of Shibarium, Metaverse, and significant coin burns. Shiba Inu's Layer 2 blockchain solution, Shibarium, is being tested currently, but this needs to be launched sooner rather than later and go off without a hitch, said Williams. To add to this, Shiba Inu's own version of the metaverse needs to be ahead. Therefore, Shibarium will enable fast and low-cost transactions, which will optimize blockchain-based gaming, and transaction fees will be the key to increasing usage in the Shiba Inu ecosystem. So guys, this is it for today's video. I hope it could be a great help to you. What do you think about today's video? Share your views with us in the comment section below. Don't forget to click the bell icon, and thanks for watching.